Welcome back. You just heard the closing bells ringing there. Let's see where we finished out the day here. The S&P 500 closing up 0.5% at 6448.29. The NASDAQ 100 closing up about 0.75%, 23,414.84. The Dow just under the unchanged line in negative territory at 45,270.89. And same with the Russell, down about 0.1% on the day at 2349.98. Now, I do want to welcome in our closers panel. We have some earnings due out here shortly, so I'll welcome in Kevin Green, our senior markets correspondent, back to the show, and Alex Coffey, our senior equities contributor and the host of Next Gen Investing. So we have Salesforce coming out here just shortly. We also have American Eagle. Let's first start with Salesforce. Alex, as far as what the street is looking for, what are expectations here? It is not a great performer among the 30 worst performers in the S&P 500, second worst performer on the Dow this year.
Yeah, this is a story of disruption and deteriorating growth story. It's now in the single digits for both revenue as well as earnings growth expectations, both around 8.5%. But to me, this comes down to agent force, and it comes down to what's going on those numbers. Looks like they are hitting as we speak.
Yep, and we've got them right here. Salesforce EPS coming in at $2.91 versus expectations of $2.56, so a beat there. As we look at their revenue for the second quarter, it is coming in up almost 10%, 9.8% year over year at $10.24 billion. That's their overall revenue. Their second quarter operating margins coming in at 34.3%, estimated to be 33.8%. Also, service revenues for the second quarter coming in at $2.46 billion, estimated to be $2.42. So pretty much beats across the board as we're getting these first numbers in. Their sales, $2.27 billion, up from $2.24 estimates calling in there. Kevin, as you're just starting to digest these numbers, is it going to be enough here, these numbers, because they've been a really poor performer year to date?
Yeah, it's going to be mixed when you're looking at the reaction. If you're looking at the fiscal year operating margin guidance for non-GAAP, they're looking at guiding at around 34.1%. They did raise that up a tad bit here, but they if you're kind of looking at the revenue guidance, I would say it's actually showing maybe a little bit of deceleration when you're looking at the fiscal year 2026 as well as just third quarter. So I think this is actually kind of a mixed quarter here. Alex is right. This is a company that has been growing, but it's inorganically. They had a lot of fat within their business. They tried to trim that around this time last year. That's why we did see some relative outperformance when it came to the stock price. But now they continue to kind of double down and acquire new businesses. And so once again, they have a lot that's on their plate. Let's hear what the conference call is going to be like, especially when it comes to the enterprise environment for large cap companies, if they are trying to take some market share from others within this space, because it is a lot of competition. But I would say this is a mixed report when you're looking at the guidance. I'm not sure if Alex sees anything different, but just from my eyes here, I would say top line growth, maybe not so great. Margins kind of holding in there, but definitely decelerating in my eyes here.
Yeah, and the margin story is sort of in line, but this third quarter sales view is lagging estimates at the midpoint here. Shares dropped as much as 4%, recovering slightly, though, here now down about 2%. Alex, as you're starting to take a look at these numbers.
Yeah, I would say that obviously the quarter that was reported, second quarter is a strong quarter, but this is sort of what Salesforce does. They kind of tell you it's going to be 75 and sunny, and then they consistently deliver 78 and sunny. So I still see that in these numbers, perhaps trying to lower the bar a little bit and reset expectations for the current quarter. Certainly disappointing on the third quarter, current quarter revenue guidance, where the high end of their range is where the midpoint of street estimates were. But even so, when you look at how big of a beat this was, particularly on EPS, you don't necessarily see it show up in the full year guidance in these numbers. And so they guide for the full year 1133 to 1137. They had seen 1127 to 1133. That, to me, echoes what Kevin says, which is a story of deceleration, and maybe the best quarter for their fiscal year is the one that they just reported, unless they can deliver beats again.
And they're just coming in with their, fiscal year 26 EPS, coming in slightly above the expectation there at 1133 to 1137. consensus was for 11.29. But, as I'm taking a look at their performance obligations for Q2, their remaining performance obligations, and we've spoken about this before, that this number is so important. A small beat here, 59.9 billion, estimates coming in at 59.45 billion. Kevin, what do you think the primary focus is going to be on the call here? Because Salesforce has to prove it's not going to be a loser in the AI race. And I think analysts and investors are going to have a lot of questions.
I don't even think it's so much AI. I mean, agentic AI is going to be used 8,000 times within this conference call. I think they're actually one of the ones that minted that name, if you will. The problem that they have, once again, they have so many different platforms, so many different tools that can be used and integrated within their platforms, but they're not really finding the synergy. Sometimes they actually are. They have two separate stacks to service the same clients. And so that's a problem. And investors have seen that as a problem. Now they continue to grow, but they're continuing to buy out companies. And once again, they're just not able to integrate as quickly. You want to see the remaining performance obligations in the mid double digits. That's really what the market wants to see. Either revenue growth sitting at around 14 to 15% year over year, or you see the remaining performance obligations hitting 13 to 14%. We're not seeing that right now. We had one quarter about 2 or 3 quarters ago where they were able to see, to hit that metric, but it just has not been consistent. And unfortunately, once again, the stock is kind of just rotating or gyrating at these current levels here. And we're going to see if it's going to be able to hold. I mean, this is actually a fairly key area. This 230, 240-ish area for Salesforce is going to be critical for it to be able to hold here. I'm just not really optimistic, and I'm not sure what they're going to be able to say on the conference call is really going to turn that growth story around here. There's other peers within this space that's growing a lot faster that's able to put up better numbers.
Well, they're trading down about 3.5% right now, but American Eagle just released its numbers. They are up almost 5% on these numbers. Second quarter net revenue beating estimates here, coming in at $1.28 billion. Estimates were calling for 1.23. Now, that is a year-over-year decline of less than 1%, but they did see their total stores numbers go up there. And as we're looking, the street is favorable to this. Alex, these numbers still coming across the wire here, but initial takeaways, we've seen a mixed bag in retailers today between Macy's and Dollar Tree, and it appears that they're going the Macy's route, and the street likes it.
Yeah, a collective exhale for American Eagle investors. This breaks if they were to close here tomorrow. A 9-quarter streak of lower reactions. So this has not been a company that earnings have been positively received in quite some time. You mentioned obviously the big quarter 2 EPS beat, a small beat for revenue, but comp sales grew 3%. For Aerie, they did decline for American Eagle by 3%, but a quote from the executive chairman of the board and CEO that they're pleased to see an improvement in the business during the second quarter, driven by higher demand, lower promotions, and well-managed expenses. So they say all three of which exceeded their expectations. So despite maybe some of the rhetoric in the media and the blowback, it's not showing up just yet. Maybe we'll see that play out in future quarters.
And that's such an interesting point that you bring up. And Kevin, I want to bring it to you too here. EPS beating pretty handily by 25 cents, over estimates. But the American Eagle management went out and said that the Sydney Sweeney campaign, which has been pretty mired in controversy at this point, is its, quote, best to date. So, an interesting approach to take here as people had real problems with that. Do you think there's a potential for that to show up in the next earnings report, or are we going to see that addressed on the call today?
I'm sure that somebody's going to ask about it. I'm going to be honest with you. I know of the situation, but I'm not sure how much traffic it's really going to drive. I mean, at the end of the day, they kind of talked about just kind of the nuts and bolts of their business, lower markdowns when it comes to their product offering, getting through the inventory, strong start to the fall season here. That's definitely what they want to do. Do they have a deal with Travis Kelce as well, if I'm not mistaken? So obviously maybe they're kind of trying to bring both of the boats together, and that might be working. I mean, at the end of the day, your marketing campaign is to try to get your name out there and to see and potentially start some controversy that might be pulling through when it comes to these numbers. Very low bar, as Alex kind of talked about going into this. Let's see if it's going to be able to maintain. I think you are starting to see a trend, as you talked about, Marley, in retail, especially if you're looking at the fashion retailers that are out there that are starting to see maybe a lot of the inventory builds over the last 3 to 4 quarters getting moved out. new inventory coming in, maybe leaner inventory, and their ability to actually hold margins or even increase prices. And it seems like the customer or the consumer is okay with those price raises right now, which is boosting margin and profitability.
Yeah, and shares up is more than 17% right now after their second quarter sales topped estimates. Like you just said, the consumer appears to be continuing to spend on both low cost items and also on a mid-level apparel. So thank you both for breaking this down for us. Salesforce still not performing quite as well, down about 5% on their earnings, but American Eagle up almost 18% right now. That's Kevin Green and Alex Coffey. Thank you both again.